It's UPBOptionMillionaires.com on this Thursday, January 7, 2016. S&P 500 futures came up against resistance into the later part of 2015. A great support level yesterday even was respected. We had a nice little bounce. Fed minutes came out. Anybody remember? Go back to August. August, we had the Fed minutes come out about here, and it was the Fed finger. We had a brief spike up. And then we pulled back and we hit our lows. We had to crash the following Monday. So we're setting ourselves up again, although prices are already starting to fall in a precipitous fashion. Support lies at the August lows. We had a nice bounce in September. And on the heels of the Fed hiking interest rates and some of the Fed members coming out saying, hey, there's going to be another 2, 3 to 5, some are saying, interest rate hikes this year. It's not going to bode well for S&P 500 and, being long the stock market. So let's look at the 20-year chart here. Something to look at also, a lot of people have been pointing out this, topping pattern. We've had all of these moves since the lows of March 2009. A lot of it unabated to the quarterback. But here we are. The trend seems to be stopping here much the same as it did back in just before the financial crisis, 2007, 2008, and the internet bubble. But look where the prices kind of petered out here. Much lower prices. Here we are in rarefied air, all-time record highs that we hit just last year. So if you look, support, I talked about this in my outlook for 2016. I didn't think it was going to happen as quick as it has. Support lies at the August lows, so you can just bring a trend line across. August lows, something to watch for here. I think intraday, we're going to see a nice bounce. S&P 500 futures down over 2%. I think we're going to see a bounce just like we did yesterday. We started off the day pretty negative yesterday. Had a nice bounce into the middle of the session. I got some calls for that and got out of those. But late in the day, we were pretty weak. And if you just look over the last 5 days, it's been a pretty nasty sell-off. Heightened here in the overnight hours when China down over 7%, halted their markets for trade for the rest of the trading session. So pretty amazing. And it just goes to show you the central banks ban short selling. They do whatever they want, but they're running out of bullets here to augment asset prices. Manipulate the marketplace. And when you manipulate the marketplace long enough, it is not a marketplace. And stuff like this happens. So if you look, support here lies at the August-September lows at about the 1880 level on the S&P 500 futures. But I think at some point it's going to be a great buy-the-dip opportunity. And I think even today, intraday is going to be a really nice buy-the-dip opportunity. Crude oil continues to fall, folks. This is going to head into the 20s. And I talked about this chart numerous times in my videos, even last year. Crude oil continues to break down. Long-term trendline support has been broken. You can draw it on a couple scales here, horizontal and also trendline support, and it looks like we're going to break down to 20s, which is also going to be an inverse relationship here with the U.S. dollar index. U.S. dollar index continues to shape up here. Almost got to 100 to start the trading session in 2016, but I think we're going to break out, and we're going to head up to 108, 110. Possibly 112. It'll be a 14-plus year high for the U.S. dollar index. That'll be something to watch. Some charts to watch here in 2016. How about the Chipotle Mexican Grill? JB at Option Millionaire has been on this really since the start of the fall. Chipotle Mexican Grill was one of those stocks, and you go back even further from a 10-year perspective, where the market just continued to buy it up. You've seen this, we went many months without a red candle here for Chipotle Mexican Grill. But much like the energy index, XLE, once the momentum wanes and we start to get a trend change, this is what happens. Look at this. We've had 5 out of the last 6 months for Chipotle Mexican Grill after hitting record highs. Just a complete collapse, carnage. And I brought this up at the blog at optionmillionaires.com and StockTwits and Twitter. The fact that the last big pullback we had a nice 45% decline, well, we're getting there. And I said we're going to move under $400, and we're really getting close to that. So we're going to see a lot of that for some of these names that have just been on autopilot for the last 6+ years for the marketplace. One to watch for, AutoZone. Look at AutoZone. This is a Chipotle Mexican Grill-esque type chart, and you can see down over 1.3% yesterday. This candle here is the first really big candle that it's seen since the lows of March 2009 when it was near $100 stock, so it's up 8-fold. There's a corporation that sells auto parts and glass cleaner, brake fluid, brake pads, and we saw some numbers coming out for the car dealerships to start the year pretty bullish, but that might be it. And so if you look at a stock like this, wow, it's got a lot of room to go to the downside. And you would say support probably lies at about $220 from where we are now, at about the $500 level for AutoZone. Also talked about Monsanto. And you can see it pulled back 1.58% yesterday, but looks very bearish here. We came up to the highs that we saw just before. Financial crisis, topped out there. We put in a nice bear flag. We've got the first real big red candle here. And I think we're going to head lower here. There's about a 50% downside potential here for Monsanto, down to the 50 level that we saw back in 2010, 2011. So Monsanto is something to watch, and also Apple. Apple, we've had three big legs to the upside starting back in 2000, and then in 2009, and then in 2013. Three big legs to the upside. We're pulling back again. Similar type pullback that we saw from the September 2012 highs back to May 2013. We're not there yet. We're breaking under $100, and I think the carnage is going to stop probably in about the 80s for Apple. And how about Google? Starting the year off with a gap down. Look at this, under record highs. We actually, the last couple trading sessions of 2015 saw the stock move to almost $800 a share for the GOOGL. And you can see it consolidating here, but it looks like we're going to start today's trading session, January 7, 2016. With a move to the downside. But again, look at this support here. There's about 747 level. Long term, a chart like this still looks rather bullish. Till we start to break down, then we can reevaluate for a move to the downside. But a stock like Google and Amazon continue to be the strength in this marketplace. Amazon, big red candle start the year. Yeah, support lies, and there was an earnings gap last year that I think still needs to get filled. It's actually right here at the $550 to $575, $600 level. So perhaps we get to that first before we start making our way up. But if we get down to support at $450, that's going to put it in the long-term head and shoulders top. I don't think that's going to happen, but certainly something to be aware of. Macy's got into some calls earlier in the week. Macy's just, the epitome of this marketplace right now. Look at this. We're down over 50% on Macy's, starting to bounce after the bell yesterday. Press release, they're cutting, 10,000 jobs, closing stores. The initial reaction was a quick move to the downside, but then we started to move to the upside. So again, Macy's, this is another gap I think is going to get filled. You can watch some of these retail names here in 2016, especially in the weakness. We got Urban Outfitters, supports at about the 2150 level. We got pretty close to that yesterday. You can also look at Lululemon, Lululemon. I like to call it Lululemon. You see it's moving up here off the lows to 45 level. Look for the gap at 67.50. And also, we can look at another stock, JCPenney, which was up to start the year. It's at the $7 level. You can see it's kind of hitting a bottom here. Kohl's stores, similar type action where the market has really sold some of these names off. And you're starting to see it really in a name like Walmart, which was leading the Dow Jones Industrial Average yesterday. You can see it hit its low. It's starting to make its way up. We had a big gap down in October. This looks like it can get back up into the 70s in the early part of 2016, so it's going to be a nice year for Walmart. You wouldn't think so. It's a boring stock, but amid the chaos and carnage today, this might be something to get into. And again, Netflix got into some 113 calls at the start of the week. Look at this candle. We haven't seen a candle like that. You have to go back. But just a huge reversal off the lows. I actually started off the trading session yesterday to the downside. And then at 1 o'clock, it's up $13 on the trading session. Huge move. I think the 115 calls were a penny. Closed the day at $3 and change. So something to keep an eye on is Netflix. Also Facebook trying to hold above the $100 level. Facebook long-term chart. Let me see if I have some of my drawings up. Just you draw a trend line across. Gets us support just under $100. So we'll see. Of course, the consolidation here. Going to break below it here this morning. That's something to keep an eye on. And then Disney with the Star Wars, biggest movie. You can see the support is breaking here. You draw a trend line across. Breaking under the 100 would be very bearish for this name. And if you look from a long-term perspective, like a stock like Home Depot, continued to melt to the upside since the financial crisis. $15 stock, all the way up to 120, over 900% gain, pulling back here. You see these big candles as the market tries to adjust to the price. Here it was like, hey, hi-ho, it's off to record high prices I go. And now Somebody ate the poison apple. It's starting to go to sleep. And we'll see if we get a breakdown here. All right, UBB here. Everybody have a great trading session. It's going to be an interesting one. And you know what? The best thing about 2016 so far is we're getting some sort of a trend here. The market is pulling back. Will we see that pullback continue? Will we see a massive recovery off the lows? Stay tuned.